Hello everyone, thank you very much for joining me at ASX Market Watch and charting trend signals around the world. It's absolutely fantastic to have you here for a few minutes on your weekend, checking out where the world indices are heading. We look at them all the major ones, and all around Europe, the Western world, the Eastern world, Asia, of course, the Americas, all the good stuff. Guys, we're starting down under Australia as normal. And actually, there's really a lot to look at. Last week we looked at the VIX, the Volatility Index, and just having a really quick look at the VIX, it's still down there, guys. So last week we were saying how it's really at 4-year lows, right down here. Not seen since early 2007, back when the bull market was still going on. Happy days for that. So it's still down there. The VIX, the Volatility Index, is still well down there, which is absolutely fantastic. The All Ordinaries, this is the All Ordinaries really quickly. And check out what is happening on the All Ordinaries. Basically, oh man, this is absolute gold. And this is your sort of the top level of resistance there at the moment, this line. And see this other downtrend, this uptrend line here, and see how these troughs are getting gradually higher. What that means is that basically the buyers are becoming more urgent. So basically, I don't know who it is, or it doesn't really matter who it is, but basically the buyers are slowly but surely pushing this market up, and this is the killer. This is the best part. This single bar here, as you can see, it bounced right off the 50-day moving average, which is your red line here. People may find support and resistance at these levels, but it certainly did on Friday. And the best part about it is it started high, went down throughout the day, which indicates weakness. However, it closed well on its highs, which indicates strength. So it's come back and given us a strong sign at the end of the day. And what we're waiting for, what pretty much every technical analyst in Australia is waiting for, is a close above 4,400. Now, I've been buying since the end of January, but that's just myself personally. That's using other methods and tools. We look at the indices and that sort of stuff, the sectors, and anyone who's been at my site, ASX Market Watch, has been following this. It's just been such a great ride. It's been absolutely fantastic. Apart from that, if the market does, this huge base, if it does break above 4,400, we're going to see a lot of activity on the All Ordinaries, and it's absolutely going to be fantastic. Really quick target. We're looking at potential 4,600 or a top target of 5,000 on the All Ordinaries. Happy days. Okay, really quickly, let's look at the S&P 500 this time, not the Dow Jones today. Well, hey, what have we got? Again, we're still in this beautiful uptrend. We called the uptrend way back here, so it's been going for about 3 months now since we called it. Happy days. You've got to love that. Apart from that, there is also a target. Let's have a look at the target. And it's reached the initial target, which is fantastic. The top target on the S&P 500 would be 1,500. Okay, so that's a pretty massive call when you think about it. But there it is. Basically, that's what it is. The 1,500 is the top end target on the S&P 500. It's not impossible, especially considering all the cheap money that's out there at the moment. However, it's still in its uptrend. If it was to close back down below 1330, about 1340 on the S&P 500, that would be an exit signal for me at this stage. However, the uptrend does continue. Happy days! The FTSE is next. Really quickly, the FTSE, and again, called the new uptrend a couple of months ago, about 3 months ago now. The uptrend still remains, but only just on the FTSE. If it was to close down below 57.55 on the FTSE, that would be a bad sign for me. That would be an exit signal basically based on that. However, again, this single bar has started high, gone down throughout the day, closed well on its highs. That indicates strength in the markets around that level, and so yes, basically we'll see how that unfolds. A top target on the FTSE, because I believe we've met our initial target on the FTSE as well. Let's have a really quick look. Yep, so basically we're at our initial target, and 6,000 points, guys. This is going to be a very, very big resistance level for the FTSE. It's a very psychological number. If you have a look way back in the day, around this 6,000 to 6,600, over the last 15 years, this level has been hard to beat. So I'm not expecting any miracles. If it does break down, I would be very cautious and acting accordingly. But yes, apart from that, if it does continue up, you've just got to keep following the trend. But in the meantime, just be very cautious. It's quite close there at the moment. Apart from that signal of strength on Friday. Now let's check out the Nikkei. Yeah, let's check out the Nikkei. Japan, and again, called a new uptrend down here about 2 months ago. Since then, the market has risen more than 10%. I would say maybe even 15% potentially. The Nikkei has had an amazing run. It's just been absolutely amazing, and it's blown all of our targets out of the water, which is good for Japanese traders. I mean, hello. Apart from that, it's still flirting with the 10,000 level, guys, and the 10,000 level is that big fat psychological round number there at the moment. Because the trend has gone parabolic, meaning that it's sort of going up and up and up and up really steeply. What we're looking for is just keep your trend line in. Parabolic trends can end nastily. It's just the nature, because obviously you can't sustain such a massive upward trend forever. And yeah, so when it breaks down, if it does break down below that 9,600, that would be a bad sign. I know that's quite a way away from where we are, but there it is. It's just moved so far and so fast that that you have to give it that amount of leeway, and that's the amount of leeway that I'm giving it. Next, let's look at the Shanghai. Okay, so I haven't actually looked at the Shanghai this week. However, what we're looking at is it's actually broken down again, guys, which is it makes me so sad. Because, especially as a few Australian traders have pointed out, that the All Ordinaries does tend to follow the Shanghai Composite over the longer term. So what's actually happened is it's found resistance at the 200-day moving average, which is very common, and now it's also broken down below the 50-day moving average there as well, which is the red one. And yeah, look, what I would be looking at is retracements. Based on this, let's have a look. Just ignore all the fancy lines. The 50% one is the one that we're looking at, and that's at 2,300. What I'm looking for is for price to find support at 2,300, and that's at around here. And if it does, then that will be happy days, and if the market moves on from there. However, at this stage, it's in a short-term downtrend, and also in a medium-term downtrend at this stage. If it closes above 2,500, that would be happy days and back into positive territory. Guys, that's pretty much the world from a chartist point of view. I hope you've enjoyed. Apart from that, have a fantastic week. Happy trending, and bye for now.